Hey guys, Evan the Trader here. So I'm glad to welcome everyone watching my videos, and today we have a very important topic that most beginners ignore. It's about how to correctly choose the currency pair and the amount of the trade. Why is this important? So in trading, many make the same mistake. They simply pick the first pair they come across and choose any amount, $5, $10, $20, meaning they do not consider their deposit size. So they approach risks incorrectly and do not develop any strategies. There is no strategic thinking. It's important to understand that success in trading actually begins before entering a trade, which is determined by the properly chosen currency pair, its volatility, its profitability, how much you're ready to risk in one trade, and how predictable the chart's behavior is. So today, I will give you a complete script for choosing a pair, talk about the risk-reward ratio, and at the end, give an example of a trade with full technical analysis. Let's go. Okay, so firstly, we always look at the profitability of our currency pair. So the profitability is written here, like 92%. Do you see these numbers? 89, 87, 79. That is, each pair in pocket option has its own profitability percentage. And it's better to work between like 80 and 97% where there are no sharp jumps and where a stable return occurs. Why is this important? So because if the profitability is low, you won't be able to recover from losses in a row. It's better to choose around 80% and higher, and that's something you must remember. Next up, we select pairs with normal volatility, too volatile pairs, many false moves, too slow, few signals. So the ideal balance is when the volatility is normal. For example, in pairs like euro, a dollar, euro, pound, euro, yen, they respond well to levels on which normal technical analysis can be performed. That is, we do not pick pairs randomly. We approach this strategically. Another mistake I want to mention is trading off of Forex news. So when news come out, candles explode, prices jump, levels break, and your analysis doesn't work. Therefore, it's always important to check news, use any economic calendar, and avoid trading on Forex news. This is an important point. In trading, everything works in conjunction. So chart analysis and economic news analysis both affect the price in our pair. Furthermore, we must choose a pair where the chart is readable. A very important point, when opening a chart, check if the levels are visible, if there is a trend, if pullbacks are clear, and if the structure is visible. So if the chart is jagged, there are chaotic candles, immediately switch to another pair. For example, for the euro dollar pair, the 1 minute time frame is set. Let's select the hourly time frame to understand the overall trend. Right now there's an uptrend, you can see for yourself. Let's place a trend line right here. It's clearly going up. There was a fall here, and now the trend is going up on the hourly time frame. The chart is very clear, not chaotic. Here you can see some correction in the middle, but it's moving quite confidently. So if we check the minute time frame, of course it will show us some jumps. Right here you can see 3 candles. It's fluctuating right now. I think it will quite possibly reach this level soon, and it already has while we were talking about it. So it reached this level and even broke it. So you see the chart is very clear. Now, how to choose the trade amount. This is, in my opinion, the most important part of risk management. The rule is 2-3% of your deposit per trade, no more, because in quick trading, distance is important. If you risk 10-20% of your deposit, you will burn out very quickly. So you must remember this. If your deposit is $100, then the trade amount is $1-2 or like $2-3, no more. If your deposit is $500, then the amount is 10 to 15. 1,000, 20 to 30 accordingly. And if it's like 5,000, 100, $200 at most, this is your stake. So the formula is trade amount deposit times 2 or 300s. This is a strict rule among professionals. You can even set it to 100th for now. So I'll explain why. This protects your deposit from accidental losses. So one unlucky series won't wipe out your account. You can trade calmly without emotions, make 20, 30 trades a week and stay in profit. That's an important point, and you should tattoo this into your brain, okay? So now I'll try to open a trade so you can see how I conduct tech analysis. For now, we will work with Euro USD. So what do? Start with the hourly time frame, always begin here. We already drew the trend line, it's an uptrend. Why this pair? So again, I chose it because I understand the chart and the trend is upward with a slight correction and minor falls. We marked the bottom. So using the 15-minute time frame, I slightly lowered the time frame again. You can see the candles pointing upward with tails. A small impulse down, but this doesn't mean anything. It's good because if it gets bigger, you can enter the trade. Let's open the 1 minute time frame, wait for a slight decrease in the candles, and then open a buy, and don't rush. Choose the pair, understand the chart, look at the different time frames, then open the trade. So the trade is open. Now let's wait for the situation to develop. Again, don't pick chaotic pairs. It's harder to do tech analysis there, and the risks are much higher with stable pairs, with clear charts. It's much easier to earn in the long run. So that's a key point here. We want long-term profits, so remember, approach this consciously. The current candle is going down, but I think it'll level out within a minute, even if it drops. I don't think it'll stay below this level for long, so we just wait calmly. The impulse was upward, the dynamic is clear, and we conducted tech analysis. So it's much easier to understand the chart and candles here. I recommend always using candles. Of course, there are other types as well. So there we go. We earned fantastic close with a very good profit. Congratulations. Next up, I'll go to the second pair just to look at the chart. For example, let's pick USD and Japanese yen. Okay, so what do I see here? It's somewhat chaotic here, different bottoms, different patterns that I see. Let's check in the context of an hour. Again, see the breakthroughs. Here there was a price spike up and then a sharp fall, a false breakout, and now a correction. So in this kind of situation with this hourly chart, you see the difference between the euro and dollar hourly chart and this pair. I wouldn't risk entering even short-term trades here, if to be honest. Why? Because this market shows some chaos, large falls, candle patterns, wicks, and the market can turn in any direction given such a situation. So I do not recommend entering a trade here. In general, I've explained what we are looking for, so I'll repeat it to you. We choose a pair consciously based on the chart. If it's clear, understandable, then we open a trade. Next, look at the profitability percentage. Above 80 is fantastic. Here are pairs below with profitability like 62%. Let's check this out. Yeah, so let's look at this chart. This situation is already chaotic. Can you see this? I don't recommend entering here because the profitability percentage is very poor and the behavior of the chart is unpredictable. So making tech analysis is always difficult on these charts. We are not playing in the casino right here. We are earning money on trading, so I don't recommend entering this pair. Look for pairs without sharp swings, with profitability between 80 to 97% with stable returns over an hour. Here, I don't see that in this hourly chart. So choose pairs with normal volatility, not too sharp and also not too slow. And always monitor economic news. That's very important. So what is my conclusion for this video? Why is this all necessary? You protect your deposit from random losses. A bad streak won't ruin your account. You trade calmly, strategically, and can make 20 successful trades a week. That's better than 100 losses. And you realize that we are not here to lose deposits, but we are here to earn money. Now you understand how to professionally choose a currency pair and the right trade amount. If you stick to a risk of 2-3% and choose pairs with norm volatility, your trading will become much more stable and profitable. I hope this video was useful. I look forward to seeing you in my next videos. We will continue to explore interesting topics related to trading in general and working on the pocket option platform specifically. I was glad to see you all. Good luck, good earnings, profit, and Evans out.